Magnificent melon heads. Hi, Jeanette. Today is Wednesday, February 22nd, 2023. And the big story today in markets is nothing is happening. Absolutely nothing right now. Stocks trading flat. Everybody's sitting around waiting for the release of the Fed minutes, which is expected, I believe, at 2 p.m. Eastern time today. Why is that such a big deal? We've already had the February FOMC, the January, February FOMC. We've already seen the 25 basis point rate hike. Why are the minutes so important? Everybody always makes such a big deal out of this. Well, the one thing we're going to get from the minutes is we're going to find out just how many of the Fed governors were talking about a 50 basis point rate hike during the last FOMC meeting. Now, that was before the most recent inflation print, the hotter than expected CPI that we got for the month of January. That was also before those blowout retail sales numbers in January that showed 3% growth in month over month in retail sales. So we had a lot of inflationary data points. So the market is looking at the minutes to see just how likely is that 50-point hike going to be next month. Now, at the time, there was almost no chance of a 50 basis point hike. But if they were at least discussing it in the January, February meeting, and then we got the hotter than expected CPI and the hotter than expected retail sales, well, then maybe the 50 basis point hike is more likely than we think, currently at about a 20% likelihood. So that comes out at 2 o'clock. The other news, we got housing data today that was just terrible. Now, the story is still home prices, with the exception of some markets, really aren't moving yet. The prices are flat. They're stagnant. But people have no idea just what a knife's edge the housing market is teetering on right now. There are just no sales happening. And it turns out nobody's even trying to buy a house. And we're going to look at some of those numbers here in this stream. It's really, really bad, folks. Any sudden increase in inventory is going to send home prices falling. And I mean falling fast and hard. But with that, we are going to shrink my big melon of a head. And let's see what's going on in the indexes right now. We've got the S&P is up just 7.8 points right now, or about 0.2%, just over 4,000. We've got the Dow is up 56 points, or 0.17% this morning. That's after a nearly 700-point sell-off yesterday. Ouch, that one hurt to watch. I was wondering, are we going to have to do a 1,000-point live stream yesterday? Didn't quite get there. And then looking over at the NASDAQ, we are up 51, or 0.44 on the NASDAQ this morning at 11,541. The DXY is at 104.18, unchanged this morning, so not a lot happening in the currency market, although we did have a BOJ intervention last night. The Bank of Japan had to step in and buy a few $1 billion worth of the Japanese government bonds to maintain that yield curve control. That were these big red arrows back here last night. Other than that, though, not a lot happening at the moment. Looking in the commodity space, we've got gold is up about $3 this morning, $18.45. We've got silver is at $21.79, up down about a dime, or 0.43%. WTI crude is down 75 cents, or 75.61, down about 1%. And natty gas caught a little bit of a bid this morning, up 7.5 cents, or 3.45% at 225, still well below that 9-day moving average for natural gas. Excuse me. Looking over at the bond market right now, we have got, a little bit of a pullback on the long end of the curve after that big rise in yields yesterday. The 10-year yield is at 3.92% this morning, down 3 basis points, about 0.75%. The high point on the curve remains the 6-month Treasury, sitting at 5.1%, although that is down about a half a basis point today. Now, take a look at the interest rates here. This is going all the way back to about the beginning of last year, but I want to zoom in on this recent run we've seen in Treasury yields because really, starting in February with the FOMC, with the minutes that are coming out today, we've seen this steady march up in the 10-year yield. Now, we have just broken out above the previous high from the end of December. So that's an important breakout there. It looks like we might be approaching some resistance. The last time we had any kind of resistance was probably around 4%. So I'm wondering, are we going to go up, stall out at 4, and maybe trade sideways for a little while? The RSI is getting a little bit overheated, currently around 65 for the 10-year yield. So we may take a breather for a little while on these yield increases, but right now it looks like we have broken out of this downtrend from November all the way through January. It looks like yields headed higher. All right, here, though, is the big story. Fed minutes to show support level for larger hikes and a higher peak. The readout could reveal if more officials are considering a 50 basis point move, and the tone could hint how officials are interpreting recent data. Again, this is only going to show where the Fed officials were at before we got that CPI and before we got that retail sales number. Now, it's a good bet these guys at the Fed have access to more and better data than we have, so maybe they did see that stuff coming ahead of time. But really, the tenor has changed around rate hikes since this meeting. So even if they were talking dovish at the meeting, you have to keep in mind a lot has changed since then. Now, looking right here, this is at the CME Group's Fed Watch tool, which is handicapping based on interest rate futures what the Fed is likely to do at their March 22nd meeting. And right now, there's a 79% likelihood of another 25 basis point hike. There's still a 21% chance of a 50 basis point hike. Now, that was down around like 1% a few weeks ago. So the likelihood of a 50 bips hike has really risen in the last couple of days. After these minutes today, we're going to see some change to these charts. I don't know which way it's going to go, but if the Fed governors were more hawkish at that meeting, we're going to see this 21% number bump up, increasing, and that is probably going to send stocks lower. Now, if the Fed was pretty much unified around the 25 basis point hikes back then we may see this number go lower. Stocks would like that and probably rally on the news. Now, we've already got the biggest hawk at the Fed. James Bullard is out there saying this morning, faster hikes. Sees a good shot at beating inflation. Yeah, right. I mean, how do you beat inflation once it's already risen to the levels they're currently at? They've already lost to inflation after telling us it was transitory, but I digress. Here is James Bullard. He's out there. He's one of the big proponents of the 50 basis point hikes and going higher and staying there for longer. So that is also out there going on today. All right. The other big story this morning is existing home sales. It hit the tape, and this one came in midday yesterday, and then we got mortgage data today. This is bad, folks. Existing home sales in the U.S., which includes completed transactions in single-family homes, townhomes, condos, co-ops, all of it, declined 0.7% to a seasonally adjusted annual rate of 4 million homes in January of 2023. Now, keep in mind, we had low interest rates in January. We had that big pullback in rates from November. And there was a couple of weeks of data that showed, hey, big surges in mortgage applications. So maybe we got a little bit of life in the housing market in January. Nope, definitely not the case. Check this out right here. This is now 12 straight months of declines in existing home sales at only 4 million. And you have to zoom out on this chart to get an idea of just how frozen the housing market is. Now, I want to emphasize, folks, prices have not made any significant moves yet. This is just the number of sales. All right, but look at this chart right here. This is going all the way back to 2000. Right now, existing home sales sitting here right at 4 million. We are below the number of completed transactions that we had at the height of the pandemic. When everybody was afraid of their own shadow, afraid to leave their homes, there was still more people out looking at houses and buying them than there are right now. All right, that just goes to show you how affordability is non-existent in the housing market. There are no buyers, but there's also no sellers, and so there's no transactions happening. Prices aren't really moving. But look, you go back even further. We're down here. I mean, folks, we're almost at the low seen in the GFC right now. 4 million sales a month. So if we get any sudden surge in inventory, a big spike in unemployment could cause that, then these home prices are going to fall rapidly. The only way this doesn't happen, the only way home prices don't absolutely crash from here is one of two things. We get a sudden, massive increase in wages around the country. You'll forgive me if I don't hold my breath on that. Or we get a sudden reduction in interest rates that suddenly makes payments on these prices more affordable. That brings more buyers in. Well, right now, the Fed is still raising interest rates, and they're talking about raising them for higher and for longer. So we're still moving in the other direction on that one. Now, the other thing that could move home prices is a sudden surge in unemployment. And, well, we get stories about layoffs every day. So I think the unemployment is going to get here before the wage gains and before the lower interest rates. So I don't see a lot of good things on the horizon for the housing market. Now, looking over here, we also had existing home sales for the month decrease 0.7%. That's a month-over-month number. And again, I just want to draw attention to that month-over-month number because we saw a big decrease in mortgage rates in January, and we saw a big increase in mortgage applications in January. But that did not translate into any increases in home sales. So even though conditions for a short time were favorable for a little bit of a bump in housing, we didn't see it in the numbers. Only a 0.7% decline in home sales. That's a big data point right there. Now check this one out. No, we already looked at that one. Mortgage applications surged 13.3%. I'm sorry, not surged. Wrong word. Big difference. Mortgage applications plunged 13.3% for the week ended February 17th. That's following a 7.7% decline in the previous week. Now, the big thing here, applications to purchase a home loan sank 18.1% in the week. Applications to buy down 18%. That is the lowest level of mortgage applications since 1995. All right? The entirety of the GFC, the entirety of the .com, even the pandemic, the number of people applying for a mortgage to buy a home is the lowest it's been since 1995. And think about how much the population has grown since 1995. It's grown immensely. How many people have immigrated to this country? How much has the population grown? Folks, this housing market, it is frozen in place. And it's not going to take a lot. This is a very illiquid market, and illiquid markets are notoriously volatile. 18% week over week decline in home loans. Ouch. And what's causing that? Well, you can see in this chart right here, this is the 30-year mortgage rate, and we saw this big bump up in the last couple of weeks since the beginning of February in interest rates. That's a trend that I expect is probably going to continue for the near future, and currently sitting at 6.62%. So not a lot of good things on the horizon in the housing market, folks. So, big stories today, the things to watch out for. We've got those Fed minutes from the FOMC coming out at 2 o'clock today. Look for some fireworks in the market when that happens. If we see a sudden surge in stocks, it probably means dovish minutes, sudden tank. That would mean hawkish. And that housing data, folks, watch those layoff stories, watch those unemployment numbers. Dangerous things happening in the housing market. All right, guys, it is about that time. We're going to call it today. I want to say thank you very much for your time. Thank you for watching. Thank you to my Patreon supporters. Folks, I had to delay the Patreon Zoom call for today. I just couldn't fit it in the schedule, so we're going to do that tomorrow. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, have an awesome day. Live small and dream big.